Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines, and most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. What do I mean by that? I mean, anybody who comes on this show or my twice-a-week long-form podcast is a transportation professional, you guys. I only speak to people who are active in the day-to-day, who are out here doing what you're looking to do, or who have done what you're looking to achieve as well, so we can put the right information out there that you can apply, utilize, and see a meaningful difference in your business, in your life. It's one of the many reasons why I proudly fly this American flag behind me every single day. A, we're the greatest nation on earth. B, I'm living my American dream, and I want to help each and every one of you live yours as well. Got a solo show today. Obviously had a guest on yesterday, Ed Burns with Burns Logistics. And yeah, we're going to be breaking down some headlines here. We're going to do a little bit of a topic on customer adding value to your prospects when it's not a fit. And yeah, we're going to do that. But before we get into anything further, I got to give a shout out to my friends over at VHub, vhubapp.com. Whether you're a broker, carrier, or a shipper, we all need access to trailers. And the best part about what they have for my owner ops and my small fleets, you get paid to move these trailers. That's right. If you have a trailer in the shop, you should never have to shut your operation down because of that. And you get paid to move this. This is on top of the revenue that you can get by loading this trailer out. So they got West Valley City, Utah, going up to Calgary, Alberta for $15.50 US. They also have 150 drive-ins out in Paragould, Arkansas, needing to get up to Mississauga, Ontario. You get 1,000 Canadian to do that, you guys. 1,000 Canadian. So like, you can legitimately create a drop trailer pool with these. And this is what I love the most about it, is you can grab them out of Paragould. You don't have to just have a shipper out of there going into Toronto. You can, if you have one down in Memphis, Nashville, Louisville, Cincinnati, whatever that looks like, move those trailers over there, drop them, get them preloaded, deliver them up into Toronto. They just got to end up in Mississauga, Ontario. And then also they have Dallas, Texas to Long Sault, Ontario. For $7.50 US on that, you guys. So hit them up, vhubapp.com. My friends Xavier Campos and Stacy Steen, they'll be in the audience. Just do me a favor, let them know that the Freight Coach sent you. Cody Miller, good fucking morning, freight enthusiast. Good to see you out there. Tracy St. Clair, good morning. She's watching over on YouTube, you guys. I go live on YouTube every day as well. Sunny Sharma, good fucking morning from Toronto, Canada. Let's fucking go. LinkedIn user says, good fucking morning, orange shirt gang. Corey Ritchie, good morning. Mario Herrera from West Valley City, keep grinding, Chris, #grit. I appreciate that, Mario. Thank you. Antoine Battle, another good fucking morning with the orange shirt family. That's right, Antoine. Lori O'Connell, good morning. Thanks for tuning in. Dude, it's a good show today. I'm looking forward to it. I am looking forward to it. So diesel came out yesterday, you guys. So the national average for diesel is at 409 per gallon. I get all of this information from the EIA, you guys, EIA.gov. And how do you use this stuff, though? You know, so for me, it's like there's a lot of customers out there who are, you know, they want line haul bids and everything. And knowing what the current fuel pricing is will help you bid out your freight. And it also helps you understand why carriers charge what they want to charge. Like, it's expensive to run a truck, you guys, at the end of the day, as we all know. So again, use this information to your guys' advantage. Use this information to put it in to your book of business and everything. And also, we're going to be the topic I wanted to break down is, you know, because I see a lot of the messages come through on here. Every Friday is a designated Q&A show, right? Like Monday through Thursday, you're going to see guests jump on. I'm going to have some solo shows rocked in there. But Fridays are dedicated Q&A. So any transportation, sales, and operations questions you have, DM them to me and I will answer them live on the show. Or if you got something pressing like right now and it's a solo show, drop them in the chat. I'll answer them live on the show here, you guys. The whole point of this is just to give you guys some information, right? To help you guys out day in and day out. And yeah, so the topic I wanted to break down first before we get into the articles is something that excuse me, it's something that I've been experiencing a lot here recently in building up my book of business. Freight Coach Logistics is my freight agency, and we're through SPI Logistics, and we're out here. I'm out here cold calling. I'm out here cold emailing. I'm doing everything all over again. I've been in the industry for 15 years now, and this is my first venture out on my own. And so all the objections, all the non-responses, all of that stuff, I get the exact same stuff that you guys do. And for me, it's, as when you do get a conversation with somebody, when you are speaking to them, if stuff doesn't align, how do you still add value in those moments? And, I've had a couple of conversations here recently with some prospects that turned out it's not going to be a fit. Now, could I have found a solution for what they are trying to move? So, for example, one of them was pneumatic bulk shipments. I've never done that before in my career. Could I figure it out? Yeah, absolutely, I could. But do I want to invest the time and energy and effort into building that out? I'm going to go with no, because that doesn't align with my core values. My core business is open deck and heavy haul. That's what I really jam with. Open deck and heavy haul. Yes, we move dry van freight, of course, but for the most part, our core competency is going after open deck and heavy haul. And when I have prospects who fit that criteria, but their need isn't what my services align with, is, one of them was, it was pneumatic bulk. I'm not going to overcommit in that instance. And I'm not going to invest the time in that when I know of other quality providers out there who that's their specialty, right? Like, that's the benefit of when I was doing sales training and stuff for these last couple of years and growing out the media presence and everything is I got to meet a lot of people who specialize in a lot of those niches. So for me, in those moments, I just offer to introduce them like, hey, this isn't my specialty, right? But I know somebody who that is their bread and butter. That's their wheelhouse. I can introduce you to them because that's a very specialized thing. Again, could I figure it out? Absolutely, I could. Do I want to invest the time in that right now? I don't. Because I know some other quality providers that I can put them in contact with, because, at the end of the day, you're not going to get punished for doing the right thing in those moments, and then other modes of transportation as well. If I'm speaking with a shipper, and I'm speaking with a prospect or whomever, and again, my area of expertise doesn't align with them, but they're like, hey, I'm looking to save money in this niche, for example. Like, we're not a high volume shipper or anything like that. We're utilizing other brokers. I'm going to give them my honest opinion in those moments with those things. Like, for intermodal, for example, if you're moving one intermodal shipment a month, do you really need a broker for it? No, you can get set up directly with intermodal carriers and you can get those cost savings in there. Because again, like to some of these, a lot of the shippers out there, you guys don't have a ton of volume, right? They might only have one shipment a month or a week or 20 shipments a month or whatever that looks like. And to some people, they're not going to want to work with them. But the people who are providing those quotes and stuff like that, of course, everybody's got to make money in this equation. But if they're a smaller, like a small business and everything, and they're looking for real cost savings in those moments, those are like, again, back to, I don't think you're going to get punished for doing the right thing. It is explaining to them like, hey, if you're, get set up directly with these carriers. These are who you need to be speaking with, and you can eliminate the middleman. And again, I'm a broker, right? Like that's counterproductive to some people's opinions. But I think that, again, that's not my specialty. That's not what I want to do. And if they're like, hey, we need to look at our entire transportation spend in what we're doing and going to outside providers, although we're saving in some areas, and we need to save a little bit more in this because we can pass that along to our customers, then having those conversations with them is going to be extremely beneficial in the moment. Take that as an opportunity, because I personally believe in just like one of my core values in my business. It's my first one is always do the right thing, do the right thing. If you can't do something, there's no shame in that. If you know a solution that is going to benefit somebody else, like, again, that's what a service provider is there for. Right? That's what a service provider is there for. And I want to ensure that anybody who I speak with or anybody who speaks with my company has a positive experience with us. Now, is it going to be everybody? No, it's not going to be everybody. I'm not ignorant. I know not everybody who follows my stuff likes me or likes what I have to say. I'm aware of that, but the messaging that I'm putting out there and I just want to work towards everyone having a positive experience and a positive interaction, because it's like, you never know who somebody knows, right? Like, I've seen people leave companies and go to other areas, or I've had it paid back in another way where they're like, hey, I was speaking to this individual. They actually are the transportation manager at this company that has the freight that you're looking for. I told them about you. They're asking for your call. That's completely worth it in those instances, right? You never know who's listening. And that's what I want, a lot of people to know in a lot of these moments is you never know who's listening to this stuff. And it can do a lot of good for your business by holding yourself accountable in those moments. And and again, when it comes down to it from a revenue perspective, I need all the freight I can get right now. We're building up, but I won't stray away from my business model. I won't stray away from my service offerings and my core values. I'll never negotiate with myself in those moments. I've learned that over these last couple of years in going into business for myself. And those are the things that I'm applying. And yeah, so that's kind of my little 5-minute spiel this morning on a topic that I see kind of coming up a lot. And, holding yourself in those moments is very key. Let me see here. Alexander, good morning. Thank you for tuning in. Zach Perlman, says, morning, y'all. Julia Olaskoga, what is up? She says, good morning. I'm here finally. It's been a while. See, Julia is a phenomenal marketer of her company, One Call Logistics. It is ingrained in my head. Every time I see Julia, it's One Call Logistics. So she's out there hustling. Madison Murphy says, howdy, morning, y'all. Do the right thing. Yes. All right. So out there, got to have my obscene amount of coffee in a day. Black Rifle Coffee. If you're listening, I'm a coffee club member. My podcast is Coffee with the Freight Coach. I think it'd be a pretty cool thing. Obviously, pro America guy here. Let's do it. Let's talk. It'd be awesome. I'm just going to manifest that, you guys. Just wait. One day you're going to see that my podcast is going to have an advertising agreement with Black Rifle Coffee Company. Anyways, we're going to break down some articles. As always, if you do have any sales or operations related questions for the transportation industry, drop them in the chat. I will answer them live on the show, or otherwise Friday's show is designated Q&A. All right. First article we're going to break down. It's from freightwaves.com. Truckload capacity flips from unsustainably tight to unsustainably loose. Rejection rates fall to a 3-year low. Tender rejection rates, for the first time since the economy was shuttered in COVID, the national outbound tender has fallen below 3%. Making early 2023 the softest sustained truckload market since data history began in 2018. Obviously, a little caveat, that's not saying that this hasn't happened before. This is just back from when they started reporting this data back in 2018. Tender rejection rates measure how willing carriers are to accept requests from the customers to ship loads at previously agreed upon rates, contracted rates. Rejection rates above 6 to 7% typically indicate a tighter market in which spot market rates and volumes increase. When rejections are below 5%, the inverse occurs. Obviously, if you're accepting tenders, that means you're accepting the rate that you provided. So RFPs, you guys, request for proposals, or RFQs, request for quote, however you want to spin it. A lot of shippers out there bid on a biannual or an annual basis. So a lot of the rates that are published for 2023 were bid back in December, January of this year, or February of this year, and they got published in March. However that looks, it's a different between a lot of shippers. So when people are accepting the rates that they bid upon, this isn't like the customer is out there saying you need to be at this rate right now. You bid on this rate. So if you bid $2 a mile and that's your contracted rate and you're accepting it, that's the rate that you bid. Nobody else bid that. If you're getting awarded that, that's my experience in bidding on freight. I've never participated in an RFP where a customer set all the rates and forced you to take that freight if you wanted to move it. Now, can I say that that's not out there? It might be out there, but in my experience, all the rates that I accept are based off of the rates I personally provided when I filled out the RFP. I think it's very important to put that caveat in there. Spot market freight that comes available, that just generally when the waterfall effect, if they have 10 providers on a specific lane and all 10 reject that load, it jumps out into the spot market. Or that's when if it's a brand new load, for example, a brand new customer, brand new lane, it starts out in the spot market for some of those opportunities that come about because the volume isn't agreed upon yet. It might be a one-time shipment form, however that looks. There's some very key differences out there. But again, it has to be noted that we're only, when you have an RFP, when you have published rates that are contracted, it is rates based off of what you as the company quoted. All right. So anyways, during the OTR averaged, during 2021, the OTR averaged almost 23% at both spot and contracted rates, increased rapidly throughout the year. In 2019 and 2020 were relatively soft periods for trucking. The National Truckload Index, which measures the average spot rate for dry van loads from FreightWave's Trusted Rate Assessment Consortium, shows that the rates are still falling entering April at a much stronger downward trajectory than what many would have called a normal year, than what many would call a more normal year. Excluding the total estimated cost of fuel, rates are only 7% higher than in 2019. So again, like this, it also must be noted that this is for dry van. This isn't flatbed. This isn't reefer. This is strictly for dry van, the data that we're talking about here. There is a case to be made for spot market hitting bottom in terms of rates over the next month, but that depends on how disciplined carriers are with their pricing or were with their pricing. Larger contract heavy fleets have not been feeling market pressures as long or as strong as the smaller spot market dependent fleets have. That is evidenced by the looking at accepted tender volumes and contracted rates. The contracted load accepted volume index measures load volumes that are accepted and moved under contracted rates. As of this week, accepted volumes are still 8% higher than what they were prior to the pandemic, but that's not the full story. Contracted rates are still averaging 24% above where they were in April, a much stronger rate situation than the spot market. This is also driving force behind rejection rates being close to all-time lows. What this means is there's essentially no loads falling from the contract to the spot market, something that characterized the 2020 to early 2022 era. Many carriers have come accustomed to this volume of transactional business and built their network out there, and it's completely evaporated in a short period of time. Like the 23% rejected rate, sub 3% rates are not sustainable, even if demand remains consistent. Rejection rates below 4% are indicative of a carrier having too many gaps in their network. So there's good information in this article, like there really is, but again, like there's some little areas that, again, the caveats that are coming on out there. This isn't, again, I don't know if this is just data provided by large asset companies. I'm assuming brokers are providing some of this data as well. So when a broker accepts a load at a contracted price, yet puts it out on the spot market to source the carrier, does that still make it a contracted load, or is that technically a spot market load at that point? I don't know. There's a lot of semantics that could be argued. But again, there's some good information out there. But what does this mean, though? Like, I think that, again, there's a lot of people who were dependent on the spot market, but that's not where all the freight is. Like, there's a lot of freight opportunities that are out there, you guys. Like the shippers that I'm currently working with right now, yeah, we got a couple of RFP shippers with published rates. We do, but we got a couple of shippers who no, not at all. It's very situational. It's very project-based and everything else. So there's still profitable freight that is moving out there. There's still a lot of profitable freight that is moving out there because not everybody subscribes to every single data source that's out there. There are people out there who are local that, again, they're lower volume. I feel like a lot of the data that's reported is from a lot of enterprise level shippers. But again, that's not everybody. And that's like my main message with a lot of this stuff out here is it's like there is opportunities everywhere. If you're an owner operator, like we talk about almost daily on this show, own your backyard. Whatever equipment type you have, go around and introduce yourself to literally every shipper in your backyard. Know the lanes you're going to run, though. You can't go in there and just say you'll run anything for them. Know the lanes and the areas that you want to run, and talk to them about that. As my friends who are shippers who come on this show to specifically speak to the owner operator and small fleet and just really the industry in general on how to solicit them, the playbook's out there. And if I was a small trucking company, which a lot of my friends are. A lot of my friends are owners of business, small trucking companies and owner ops and stuff out there. We have these conversations. Getting that direct freight is so key, because what you see on the spot market, again, not all the times, but in some instances, there's some shitbag brokers out there who are posting ridiculously fucking low rates. All right. I see it out there and it's fucking appalling. All right. I get it. But to eliminate that, getting set up direct is going to be your jam. It's going to help you out a lot. And again, knowing your business, knowing what lanes you want to run, knowing what your break-even points are, what your profit margin percentages are that you want to operate on, do that. I mean, again, I have Adam Wingfield on this show all the time, Innovative Logistics Group. He's former owner op, former trucking company owner, consultant. Now he's got phenomenal information out there for you. So hit him up. I'll scream his name from the mountaintop every single time. So again, you guys, that article, freightwaves.com, title of this article is Truckload Capacity Flips from Unsustainably Tight to Unsustainably Loose. As always, you guys, I put the links to the articles over on the Freight Coach YouTube channel, as well as the Coffee with the Freight Coach audio only replay of this on iTunes and Spotify. And as always, if you think your boy did a good job, subscribe and share to the show. Give me a fucking 5-star if you thought I gave 5-star effort, you guys. That's all I'm asking for, because at the end of the day, that's how we reach more and more people. That's how we are the top show, is because of each and every one of you doing that. Because if you see value, your network's going to see value in it as well. All right, Alexis Bailey, good morning. Thanks for tuning in. As always, I appreciate that. Next article, similar article than what we were just talking about here, but it's from the let me see here. It is from Journal of Commerce, my friends at the JOC. Nico, what's up, my man? Joining in over on YouTube there. Good morning to you as well. This was written by my man, Bill Cassidy. And then it is U.S. trucking market still seeking bottom, but bounce is expected. And let me see here. Let's go with, sorry about that. My wife was calling. had to let her know I'm a little busy right now. All right, let me see. The outlook for the U.S. trucking industry depends on one's vantage point. Shippers see a green valley ahead, while many truckers are driving through a dry gulch. Excuse me. Even for truckers, it's not a tale of two cities. It's really a tale of multiple cities, said Tom Nightingale. He's the CEO of AFS Logistics. We see really different dynamic in truckload than we do in LTL. For truckload carriers and their shipper customers, it's an oversupplied market, said Dean Croak. Dean's a really good guy. I have him on the show often. He's with DAT Freight and Analytics. I'm gonna have to get him on here again soon. In the first quarter, the number of trucks available on the spot market looks a lot like it did in 2019, but on the demand side, it continues to be more like 2018. That means demand hasn't disappeared, but it's swamped by available truck supply. The supply of capacity is the biggest issue that's affecting spot truckload prices right now. We've still got capacity in the market that will probably bleed off at some point, but we've been searching for the bottom of the freight market, and we're not there quite yet, he said. The DAT average spot drive-in rate is falling at about 1 cent per mile a week. And then the month-to-date average, excluding fuel surcharges, was $1.65 for the first week in April, down from $1.67 in March. With or without surcharges, the rate is 23% lower than a year ago. AFS logistics data showed that truckload rates dropped 14% in the quarter and about 19% year over year, a sign of lower contracted rates. He expects the truckload pricing decline to moderate to continue while the LTL rates flatten and parcel rates and demand rise. Demand has softened in the LTL and parcel that's going on, leading to some excess capacity. I don't really move a ton of dry van freight right now currently. I'm seeing that out there, but I'm also seeing from the freight that I'm moving in the markets that I'm moving in is rates are starting to increase. I'm seeing that, the driver, but then again, that's for the spot market opportunities, because we work with consistent carriers at my company. We work with the same drivers time and time again. We very rarely rely on spot market to source our capacity unless it's a brand new lane. But our job is to identify the right carriers for these loads and keep them off the spot market, right? Like that's our long-term strategy with everything. Is we want to work with the consistent carriers time and time again based off of the lanes that they run and how we can match them up with the freight that we're moving. LTL, I can see that because, like, again, because like there is, I think, a point to be told that over these last couple of years, there was LTL style shipments that were shipped out in a full truckload manner because customers needed capacity, they needed the shit moved and everything else. And now that's going to naturally transition back to LTL and parcel and everything else. They're not going to need to go out there because of the demand that's in the market, and other people are slowing down. And that's kind of where we are. There's a second half bounce. Freight demand as measured in shipment volume is down 15 to 20% year over year, but he expects that to change. I do think there will be a rebound in the second half of the year. It just may be a little bit later and a little less pronounced than we would have expected earlier this year. The typical seasonal boost truck demand gets in the spring from produce season into retail season hasn't materialized. We're in that slack season between seasons right now, Dean Croak said. And he says, you usually see a lot of lumber and steel getting moved in March and a lot of machinery in March and April. We're only starting in April, but we haven't seen the early signs of that yet. And inventories are still being drawn down. I've talked to a lot of my colleagues in the retail sector, and the bloat is still there. And that was from Holly Pierce, a director of materials and logistics at C&D Technologies and Trojan Battery. And a lot of retailers have had that long bullwhip effect where they've loaded themselves up with inventory, and now they're starting to chew through it. So, again, that's something to be said about some stability, right? If inventory levels are still, high-ish where they're not replenishing them, they're going to buy that down, or they're going to sell that out slowly. And then that means that at some point this year that they're going to have to replenish it, right? And then that's when you're going to start seeing an influx of freight. Or who knows? Again, I'm not in these guys' boardrooms. I'm just basing my opinions off of these articles that I'm reading as we go. I personally subscribe to that. What they're saying, that the rebound will happen later this year. My gut tells me after Labor Day, and it's going to be before the holiday push. But I don't see it being as like big of a deal as what they're saying. I think you're going to start to see the rebound come. I think that there is going to be a rebound in pricing out there on the spot market. But it's not going to be like a fucking $1 a mile jump or anything like it. It could be. Fuck, I don't know. Don't know what's going to happen out there. But my gut tells me is there's going to be a slight rise in it, and you're going to start to see a breath of air, fresh air being breathed back into the spot market at later this year. And then this is also something that's not talked about a lot, is that contract evolution, that there are shippers that held out on a contract bid awards in the first quarter as spot rates slumped, are finalizing those contracts. And one of the challenges I've faced as a steward of the freight budget is identifying when to pull the trigger on my full truckload bid, said Pierce. Typically, she would have pulled that trigger at the end of the year, but with rates plummeting, we had to ascertain where we felt comfortable, she said. The pricing plunge has slowed, and the bid process was completed, and they haven't returned to their pre-pandemic contracting norms, and that they made some changes to the way that I run the bid. And I'm not looking to secure rates and contract for every lane everywhere. We took a holistic look at this, and if there's less than 20 loads a year on this lane, we're going to let the spot market handle it. That's a good thing, potentially. Again, like people are looking at their bid, and especially like with technology that's coming out there, is it's becoming more and more easy. If you're looking at a historical RFP, it was done in a very manual manner. But my friends over at Emerge, they have the massive RFP tool that's out there that a lot of shippers use. So if you look at it like that, and then LoadSmart too, I got, shout out to my friends over at LoadSmart. They have a very similar one that I've actually fucking used in my brokerage this year to fill out bids for some shippers that we're working with. So again, like they can be a lot more nimble in their approach. And I think that what Holly, I believe it's Holly Pierce, excuse me. Yeah, Holly Pierce is talking about here is it's like, hey, we're looking at this. We're from like a volume perspective where we would have contracted it based off of volume in the past. We're not going to do that. We're going to run that in the spot market. So that could also see more spot market opportunities that come about out here later on this year because of that. So again, I'm always going to be an optimistic realist, because I know that there's some very real shit that goes on in the industry. I'm not living in the fucking clouds or anything like that, but there's opportunities out there. And that's what I want people to truly understand, you guys, is there are opportunities out there. There are shippers who are activating new providers every single day. What value can you bring as a service provider, whether you're a broker, owner, operator, fleet, whatever that looks like? How are you going to add value? because that's going to be the biggest thing to stand out in the market in today's day and age is you can't just call people for the sake of calling them anymore. You can't just call them for the sake of calling them. You have to have a very strategic approach in what you're going after and why you're going after them. That article, joc.com, U.S. trucking market still seeking bottom, but a bounce is expected. We're not going to get to the third article today. That's fine. Zach Perlman says Data IQ is showing another 2.5% drop in spot rate week for week over dry van with an average rate of $1.59, which has consistently dropped every week. Do you think we've really seen the bottom yet? It's tough to say, man. It's tough to say. I think dry van is, kind of in a market of its own in that regard, because it's always the most volatile. Dry van freight is, for the most part, because that's where the majority of the capacity is sitting. I think that looking at it from a national average perspective, yes, that data point is very relative, but it's also not indicative to every lane that is shipping out there. So I think if you're going at it from a pricing structure, if you want to bid based off of some of this information and lock in long-term pricings, you're really fucking pigeonholing yourself. You really are. You have to look at stuff from a 90 to 180 day freight cycle. That's how I bid freight. I don't bid off of today's price. I look at an average based off of either the 30, 60, 90, 180 day market, because again, I price my freight to move it no matter what. I'm not going to be the one that's going to race to the bottom in a lot of those instances. I want to price it to move it, and I want to pay my carriers accordingly, because I have no business without trucking companies to source my customers' freight with. But that's it for today. You guys, we'll be back tomorrow, the Freight Coach Morning Show. We are the top transportation podcast, excuse me. My mind works faster than my mouth sometimes. We'll be back tomorrow. As always, if you guys saw value in this, subscribe and share the show. Rank the show out there on iTunes and Spotify, YouTube, all that shit. Get it out there, because if you guys see value, your network's going to see value in it as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.